Megapack factory going up in Shanghai, the Giga Nevada plant going to get to 100 gigawatt hours per year, and that a portion of that will be for stationary storage. So if you start doing the math on some of this stuff, it gets really large. We may have an inflection point where analysts start to take the energy side of the business more seriously.
If you start doing the math on some of this stuff, it gets really big. The Megapack facility in Shanghai and the Giga Nevada plant will reach 100 gigawatts annually, with a portion of that going to stationary storage. We might be at a turning point where analysts begin to pay greater attention to the energy sector of the company. Matt Smith, Vice President of Equity Analysis at Halter Ferguson Financial Incorporated, a company that offers asset management and financial planning, was that person. And Matt's optimism about Tesla is significant, particularly considering that he was a managing partner at Good Soil Investment Management, disruptive innovation-focused hedge fund, prior to joining Halter Ferguson Financial. Earlier in his career, Matt worked in investment banking and valuation, and he has a wealth of knowledge in the energy sector. To put it simply, Matt Smith is an industry expert, so his advice is valuable. You're really associated with Tesla. You're really involved with Tesla. You founded in 2009. Then, your statement that you invested in 2017 was rather intriguing because, well, it was arguably the riskiest period. That's a bit of a contradiction, isn't it? Since I work with startups, I enjoy finding businesses that are just getting started, which is 2012 in this case. After that, it was flat for many years from 2017 to 2018. They were on the verge of going bankrupt. As there had been speculation of their doing so, wow, this is a good investment. You thought at that moment, then you realized they were more than that. After you saw that they could actually ramp and the benefits of the plant, I understood the entire situation. You get what I mean. Though, as an investment, 2017 to 2018 was actually the lowest point, but you entered at that time. Indeed, I was simply enthralled with the company. You know, additionally, the company where I work actually owned a Model S that they occasionally allowed their staff to drive. I had the opportunity to drive the corporate Model S for a few days in what was probably 2016 or something like that, and it completely amazed me. Oh my gosh, this is the future, I thought. I was just like, this is the car that I want. And I cannot wait for them to launch a lower-priced car, even though I was far from being able to afford a car like that. Additionally, everything in this makes perfect sense. The consumer experience is so much better. After that first encounter, I kind of developed an addiction to Tesla information and stuff. In spite of this, Tesla's market share of electric vehicles in the United States dropped from about 65% for the entire year in 2022 to 50% in the third quarter, although Tesla cut prices on popular models which caused its vehicle sales to rise almost 20% in Q3. It wasn't enough to sustain market share as competition grew. Tesla has lost ground to new rivals that have introduced their own electric vehicles, including both EV startups and established automakers like Hyundai, BMW, and Mercedes. According to a new analysis by Cox Automotive, industry leader Tesla's market share fell to its lowest level ever, despite the fact that EV sales in the US increased to over 300,000 for the first time in the third quarter. That being said, despite a price war that the Elon Musk-led company initiated to strengthen its position in the cutthroat EV industry, Tesla currently only controls half of the market, down from 62% in the first quarter. However, the market firm, which is scheduled for client delivery this quarter, Tesla could buck the declining trend. In order to combat a challenging market climate brought on by high inflation and rising borrowing costs, other manufacturers have been aggressively lowering their prices as they play catch-up. According to Cox, EV sales in the U.S. market have continued to rise linearly thanks to higher inventory levels, greater product availability, and downward pricing pressure. Average EV costs dropped to about $50,605 in September from about $52,750 a year earlier due to the pricing war that Tesla initiated, and they accounted for a record 7.9% of industry sales, according to the survey. Nevertheless, it is noteworthy that Rivian Automotive reaffirmed its yearly production goal of 52,000 automobiles and delivered more cars in the third quarter than analysts had anticipated. Meanwhile, due to production halts brought on by planned renovations at its plants to introduce a newer version of the Model 3 mass-market vehicle, Tesla missed third-quarter delivery estimates set by the market. although Tesla is the market. This month, that a greater variety of EV options are needed to meet the growing demand for electric vehicles. Despite the fact that Tesla's Q3 deliveries fell short of estimates, this makes investors extremely optimistic about the company. For the third quarter, Tesla reported 434,800 vehicles produced and 435,500 deliveries. Notably, the result was almost 7% lower than the previous quarter and fell short of Wall Street's expectations. According to Tesla, scheduled factory outages resulted in less deliveries and production. Planned downtime for factory upgrades caused a sequential decline in volumes, the business stated in its announcement. Our 2023 volume target of about 1.8 million vehicles is still in place, as was mentioned at the most recent earnings call. During the company's second quarter earnings call, CEO Elon Musk had issued a warning that the upgrades would result in lower production and delivery numbers. Musk warned that Tesla would continue to aim for 1.8 million deliveries this year, but anticipated a slight drop in third quarter production after summer shutdowns for numerous factory upgrades. Musk stated at the time that the company was still targeting 1.8 million deliveries in 2023, a goal it reiterated on its most recent earnings call in July, with 1.32 million vehicles delivered so far this year. Tesla still needs to close a 480,000 sales gap. A consensus of analysts surveyed by StratAccount predicted that, according to an independent Tesla researcher who goes by Troy Teslike on social media, Tesla's head of investor relations, and some of them made it public on social media. Based on 25 analyst projections, Wall Street was anticipating approximately 455,000 deliveries overall, with a median expectation of 431,240 deliveries for the quarter. Given recent whisper numbers and longer factory downtimes, Wedbush analyst Dan Ives, a longtime Tesla bull, wrote in late September that he expects 3Q deliveries over 440,000 to be viewed by Wall Street as good enough, greater than with the Model 3 refresh front and center in China, and the Cybertruck production set to kick off beginning around Halloween. Ives wrote, "We are now set to be entering the next stage of growth for Tesla globally." However, prior to that, Pierre Ferragu, an analyst at New Street Research, stated that he anticipates Tesla to deliver 438,000 units, which is 5% less than the consensus estimate. Ferragu did, however, sound hopeful, greater than in the fourth quarter. "We expect a robust sequential improvement for Tesla in both deliveries and gross margin," Ferragu stated. Model S and X vehicles and Model 3 and Y vehicles are the two categories into which Tesla divides its deliveries for context. However, it doesn't provide numbers specific to any one model or region. The closest estimate to the number of cars sold that the company reports is deliveries. Throughout the third quarter, Tesla slashed the prices of its inventory cars and current models, forcing rivals to do the same. Furthermore, Tesla unveiled the Highland redesigned Model 3 sedan with new exterior and interior features and began selling it in select 9 U.S. markets. The interior of the refreshed Model 3 includes touchscreen displays for rear seat passengers and ventilated seats, among other items. The vehicle is sold with a long-range battery option that gets about 390 miles, or 629 kilometers, per charge. More than that, artificial intelligence is driving more than just cars and robots for Tesla stock. Tesla's advances in the space are fueling optimism for the company's investors, who believe its next level of growth will be built on AI. Charles Harris, portfolio manager at O'Neill Global Advisors, told Investors Business Daily, SIBD Live, show that he remains bullish on Tesla stock. He attributes the potential upside to what he sees as significant advances. Tesla is Ma.